Very good morning, friends. This is the second list I can say is about the risk management. Before this, I had made the videos on ISO 27001 complete package. I can say the first reading sections, and after that, the interview sections. The most frequently asked interview questions about ISO 27001 and information securities as well. Now come to the topic one. This is a risk management session. Let me collect the laser point from here. Okay. What is risk? Risk, it is the possibility of something bad happening, because we always think that something might happening and we always try to prevent us from the risk part. So risk is the possibility of something bad happening. Now, the term risk is used in many ways and is different definitions depending upon the fields and context. Yes, the definition of the risk might get changed from field and context as well. Like if we talk about the insurance sector, then the definition of the risk will be changed because they mostly focus on the transfer risk. And if we talk about the banking sectors, yes, they will think about always the credit of risk. Not always, but mostly. Yes. So overall, we had made a small formula that is risk is equal to probability into consequences. What is probability? Probability means it is a chances. It is a chances of something going to happen a task. And the consequences means the result. The result that would get the output from the task. So risk is equal to the probability into consequences. Most of the people's always are not much get cleared about the risk versus the auditing parts. So risk and audit, uh, uh, these are actually related terms. Um, because if there is any kind of risk exist in some task, then audit always would be there. So risk assessment and audit are the related terms. However, both are different actually. But most of the people think that yes, both are approximate same. No, actually these are not same. Risk assessment can be done initially, say under the internal controls to avoid the gaps. However, audit is the last phases to examine the task externally, because risk can be performed very frequently in an organization, and to examine that risk, audit is also required to perform in a very frequent manner, so so that the gaps could not be come again and again. Come to the next page, the types of risk. Yes, as earlier I said that the types of risk also might get changed from the sector to sectors. For example, if we talk about the insurance sectors, that means the types of risk would be changed. So overall, there are three types of risk. The first one is control risk. So control risk is the probability that financial statements are materially misstated due to the failure in the controls used by the business. In an organization, there must be a control, but due to the failures in the control, the output of the risk is actually different. Second is inherent risk. What is inherent one? Inherent risk is the risk posed by an error or omission in a financial statements due to a factor other than the failure of internal controls. For example, the complexity of systems. Because in some organization, like in a particular very big organization, there might be a the complexity of the policies like that. So the output of the risk might get different from the actual risk, right? So such kind of risk comes under the inherent one. Third one is a transfer of risk. The risk can be transferred. Example, the insurance sector. As earlier I had said that um, in the insurance sectors, we always talk about the transfer risk. Next is the phases of risk. So if we want to perform the risk assessment on a particular task or a particular report, then what are the four phases? So first one is the risk identification. That means we have to first identify the risk step by step. Second one is the risk assessment. That means we have to find out the assessment of that risk, that where would be the risk existing in that particular report. Third thing is a risk control. That means we have to mitigate the risk we had identified in point number 1 and 2. Fourth one is risk monitoring. That means the surveillance of the risk would be there. So these are the four particular phases. No worries. I will make the detailed videos in the next session here. So, friends, how would you rate such kind of videos made by me earlier, ISO 27001, and this time the particular risk management, and after that I had planned to make the videos on the cyber security, ITIL basics and all that. So thanks for watching. Kindly subscribe and hit the bell icon. Thanks a lot.